And Bud, as the crisis moves from Europe to Asia, how long before it comes here? We're seeing the protesters on Occupy Wall Street. They're calling for wealth redistribution because wages haven't kept pace. They don't have jobs, but they don't realize the very cause of this is government itself. The wage disparity is caused by inflation.
Nicely said, Jim. You know, that's the $64,000 question that I wish I had a better handle on timing. But I'm sort of ambivalent about this Wall Street because I am not, as you know, on Wall Street. And I can see some sensibility to people that have been thrown out of their houses complaining that they don't feel things are going well, and thrown out of their jobs is, foreign labor taking over, and a whole lot of what I would call sort of unexpected dislocation of the middle class. And while I have not much interest in going down and camping in a tent with a bunch of smelly people with incredibly diverse complaints of whatever their own student loans or anti-war or whatever, but I do remember the 60s, and while it wasn't that big at the beginning, students kind of complaining about things, by the time, almost a decade had gone by of complaints, there was a major shift in U.S. policy. Finally, we're getting out of Vietnam. I think this movement will probably grow and have its political impact. And so, as I said, I'm ambivalent. I think they have some cases for complaint. And the question is, will they, quote-unquote, win? And then immediately redistribution of wealth through forced government programs of higher taxation? Will they demand more social programs? I think they will make some inroads in that way, in a way that I think in the sort of entitlement generation, I think decreases productivity and total wealth for everybody. But, that's my bias of mistrusting of it. I guess I am kind of sitting on both sides of the fence on these guys. The reality is politicians will pander to that segment because it is large enough to garner a vote. Whether they'll really affect things or whether they'll be bought off by lobbyists, I don't know. I kind of wish we just had less government, but that's a wish, not a reality. And I think, therefore, we will be swept along in a less productive, less wealthy country as these either redistribution efforts or things get underway. And I'll throw one out there. In an election year, one of the people to blame is the foreigners. It's all these cheap Chinese imports. Okay, so let's put up some tariffs and barriers. Let's have a currency bill, which passed the Senate, waiting for the House. Don't know if it'll get through, but a currency bill that says if it's determined that China is manipulating its currency, we can add tariffs. That'll be popular in an election year. I don't think it's particularly good for prices, and I think it's inflationary, being somewhat supportive of free trade and still also somewhat supportive of jobs, so I'm a little bit on both sides of my mouth. But the net of it is I don't think government's dinking around with things is particularly good, but I do expect there are going to be some political pressures there that probably are not as positive as we want them to be.
What's rather interesting about all of this is we have two protest movements. You have the Tea Party on the one hand that says, get out of my backyard, government. I don't like the way you're spending money. You're wasting it. You're raising taxes. You're running trillion-dollar deficits. So there's that movement. Then if you listen to the Occupy Wall Street, I saw an interview of one of the protesters, and Bud, it looked like his protest sign looked like a Christmas wish list. He wanted a free college education and a home. Well, hell, I'd like to have a private jet. You wonder how this plays out, because you have one group that wants more entitlements, more in government, and on the other side, you have a group that says, no, we don't want higher taxes and more government.
That's a good point. I think, though, how it plays out for the U.S., turning this all back around, is that as the world slows, we will feel some slowing as well in our economy. And the demands on government to make up for this, which is what sort of limped us through so that we didn't have the worst kind of results of the 1929-30 depressions and sort of got through. It was the worst recession we had since the Depression, but not as bad by any means. Could devolve even worse, and the reason I see it is through a slightly different lens, which is that the government deficits not only are out of control, but will get even worse. Everybody wants their, as you pointed out, a house or whatever on their free education. And the only way the government does that and pay Medicare and pay Social Security and keep a few wars going is to print up more money. The GAO last week came out with some numbers that are extrapolations of where we are going that go into the stratosphere beyond any possible level. Makes, the Greek debt to GDP ratio look tame. And the problem with all of that is confidence in our own currency, which gets me back to the way I've been recommending investment for, a decade now? I'm not sure when I started officially and publicly. But anyway, for many years, buying gold, for example, which you might think, on a risk-off of Europe solving some problems today, might not have been up another $25 to $1,750 today. But there it is, and I think it's rational considering what the projections are for our ability to manage our own government deficits, and that is the currency in which gold is denominated. And as you know, I've said before, gold is just gold. It's the confidence in the currency being lost that is driving the price up, and I think there's more to go, is my point on that.
Well, the one thing that we've covered this here on the program is that you hear proposals, well, we need more taxes or the rich need to pay their fair share. Well, the top 25% pay almost 90% of the country's taxes, so I don't know what fair would be, maybe 100%. But, and maybe that's what some of these people would like to see. But if you took, as the president wants to increase taxes on singles over $200,000 and married couples over $250,000, let's just take this to extreme and just say, you know what, from now on, if you live in this country, the top wage is capped at $250,000, which is the top income from a congressional budget congressman that heads up a committee. And let's just say we take 100% of it. Even if you confiscated 100% of it, you're still not going to solve the budget deficit. So that's why I think we're going to pursue something we did after World War II, which is a policy of financial repression, higher inflation rates, and a cap on low interest rates, as we're seeing today.
Nicely stated. I think particularly those numbers, and I've seen them, I don't remember where I saw them, but similar on the fact you took all of it. You still don't have enough to do all the obligation the government is being demanded and expected to do to maintain its position of power. And that is the path they seem to be on, including Bernanke. We've talked about that before, of basically printing up the money to kick the can down the road. This story is not new. And that's why I think the inevitable destruction of paper currencies will continue and potentially get worse as the new problems each in different places pop up, and the new answer is print more. And your point is the taxation isn't going to be able, even if they took it all, to fix the problem. It's so big. And we are borrowing 43% of our spending in the federal government level. You just can't do that and not expect consequences. The consequences, to me, seem inevitable, and the market seems to be moving in the direction I predicted and you've predicted for a number of years here towards higher prices of everything. At some point, the real estate may even turn around. I've been putting that on my out burner. But even today, new housing prices and statistics are still pretty dismal, and there's still an overhang. And even though I think physical assets, all signs are going up, oil is up $3 or $4 again today. These things are not just a reflection of oil and gold, but a reflection of the dollar. And at some point, real estate will turn around and become a good investment too. But that's yet a ways out. Just mentioning the physical assets is the way to go.
But, you kind of wonder, too, Bud, when the guy in the street finally wakes up and doesn't believe the inflation numbers, when, he hears the media talk about the core rate of inflation is within 0.2%, and he's looking at the price he's paying at the pump, his medical premiums, his food costs. I mean, I can't think of anything that I have that I need in the last year, Bud, that hasn't gone up either double digits or single digits. My medical premiums at our firm went up double digits. My cable bill went up. My phone bill went up. I'm paying more for gas, even though it's come down here recently. But with oil prices back up, I'm sure I'll be paying more at the pump here shortly. Food costs are up. I could buy a big screen TV, an LED TV cheaper, but assuming that the average person doesn't need to buy a TV every week, can you think of anything that you're experiencing that's going down?
No, I really can't. I certainly agree with you that the government numbers are cooked to tell their story more positively than the reality that's behind it. And more importantly, I think the trajectory Well, let's throw one out there. Supposedly, this is the way government works, the new super committee will come in with a great, huge savings of $1 trillion in the November-December timeframe to fix all these budget problems, and everybody will agree to it in Congress. There isn't any contention in Congress that we need to cut the budget. Well, everybody says, not my budget. My prediction is the Super Congress Committee on cutting the budget deficits over the next 10 years will fail. Then what happens? Well, supposedly an automatic sequestering of other expenditure will automatically kick into gear and fix everything, which no politician has to vote for. And I bet the accounting of government spending will somehow come up with some amount of cutting. But the reality of money going out the door won't have changed much because the various heads of the various agencies won't have been able, in fact, to cut off long-term military procurement expenditures, employees. They just can't just chop things on percentages without plans and actions, and they'll put that off for a while. My only point is to look to the future as much as to the reality of the present you're pointing to for the expectation of impossible deficits and the expectation that they can't fix it. That's no real surprise if you think about it for a while. I'm just saying think about it. And therefore, the destruction of the dollar and paper currencies of the world. And we're the leading paper currency of the world. We've benefited by, as you pointing, well, I used to the beauty contest, the less ugly beauty, or the I don't know what to call it. You know, not exactly like we're the winner in the sense of pristine, trustworthy government expenditures behind it. It's all going to collapse. Fortunately, it's not military, and where hundreds of thousands of people die, but it will be hundreds of thousands of people's savings will be destroyed who aren't aware of this, like you're able to help other people get out and be aware of. But I think we all need to be thinking through and protecting ourselves against this eventuality.
Couldn't agree more. In fact, speaking of ways to protect, Bud, as we close, tell people about how they can find out about your work at Casey Research, and also talk about your book, Profiting from the World's Economic Crisis.
Sure. The book first, World's Economic Crisis, is still with us, is my assertion. My book, written about a year ago, predicted not only that we were still in a crisis, but that the switch from private debt to the government would create a sovereign debt crisis, which is what we've seen in Europe, and what I am still predicting in China. Many of the stories behind that are all in the book of the fact that we would still be in a sovereign debt crisis. And then updates to that to how I think about the world in the current moment are the subject of my articles in the Casey Report, published at www.caseyresearch, all one word, .com. Casey Research, C-A-S-E-Y, research, the word. And I welcome people to sign up for some of our free newsletters and also to sign up for a 3-month trial and get an idea of what it is I'm thinking. Last month I said interest rates should rise. They were at 1.8% on the 10-year. It's at 2.4% today. I'm even surprised at how fast that has moved in less than a month. I think it's a pretty serious time, and we should be well aware that times are not calm and copacetic financially.
All right. We've been speaking with Bud Conrad, Chief Economist at Casey Research. You can follow Bud's work at caseyresearch, all one word, .com, and also pick up a copy of his book, Profiting from the World's Economic Crisis. Bud, as always, thanks for joining us on the Financial Sense News Hour.
Always great talking, Jim. Take care.